Hi there, welcome to this midweek market analysis. So as usual, what we're going to do is we're going to look at some of the charts over here, walk you through some of the analysis and the thought process, at the same time sharing with you some of the opportunities that you can keep an eye on as well. So let's start off with the dollar index over here. So right now what we're seeing on the DXY on the US dollar developing is what we call a crawl pattern, or you can call it a diagonal. And at the same time, if you pull up the RSI indicator, what we are observing right now is that we do have a divergence forming, which means that the market price is coming down lower in a very corrective manner, slow manner, whereas the RSI indicator is printing a higher low. So this is what we call a divergence, where two things are moving in opposite direction. Often when we see this kind of phenomenon between the price chart as well as the RSI, when we call it a divergence, it means that there's a lack of momentum to the downside, and there's a higher probability that we might see a reversal or at least a decent retracement back to the upside in the near term. Okay, so what we have over here, of course, is the pattern plus the divergence, kind of building up that possibility to look out for a potential bounce back onto the upside for the dollar. Okay, however, having said that, we normally would not be too aggressive in getting involved in the buy, but what you want to wait out for is for price, okay, to show you at least an indication that yes, it indeed want to start going higher. Okay, so over here, of course, if you're directly trading into the dollar index, you can utilize what we call a breakout strategy, which means you basically look out for a recent peak, a recent high over here. You can use that as a reference point for a breakout, which means if the price does indeed reverse and starts to go higher, more importantly in an impulsive manner, that would then be your execution. Okay, so that's the overall view for the dollar. Be cautious in selling it because this pattern here does tell us that a potential reversal is coming in. Now, if you don't have direct access to trading the dollar index straight off like that, you can actually look into the euro dollar. These two charts are often almost inverse, 100% inverse relationship. And right now, in terms of the euro dollar over here, we're kind of seeing a similar pattern where the market is going higher in a very corrective manner. We call this a crawl. If you put in your RSI, you can see a very decent divergence as well, right? Which is again indicate a lack of momentum to the upside and a potential reversal. So right now, if you're looking at euro dollar, the key low reference point is somewhere around 1.0835, where we'll be looking for a breakout. So if the market can indeed reverse and starts to break lower, more importantly again in an impulsive manner, then we'll have a potential sell around 1.0835 with a stop above 1.0930. Now in terms of target for this particular trade here, the first key level to observe or even consider taking partial profits will be at this previous low. You can see where the structure is as well, somewhere around 1.0730. If that level is able to break, then of course we can look for extended target back at this previous low around 1.0480. Okay, so that's this downside potential on euro dollar. Definitely you want to keep an eye on. Next up, we have the pound dollar. Okay, so pound dollar over here, at least for the short term, right now what I'm seeing is that we might get a near-term move to the downside, potentially towards 1.2100. Recently, the market did broke that trend line. Okay, it's doing a little bit of consolidation back to a trend line. Ideally, we want to see that continuation back down in the near term, right? Today and tomorrow, that will give us that possibility of price reaching around 1.2100 before that bigger move back up to the upside. Over here, if you're looking at pound dollar, this sell trade is actually not it's not a very high, I would say, ranking kind of trade, or it's not the best kind of trade that I personally look into. But there's still some confluence factor to consider, right? So we have this top, the market came back up, kind of formed the double top, and of course we can also observe that this move up here has started to slow down. Okay, so you get an initial very impulsive move. After that, we call this a crawl. Often we see this structure. There's a good possibility the market will reverse, right? So that's where there's still few elements coming in to support the case of a downside. But this trade here definitely is not like the best of the best. So again, you need to be clear, what style you are looking at. Are you more conservative? Are you more aggressive in kind of executing your trade as well? Okay, the risk reward on this particular trade may not be super attractive too. On a rough estimate, that gives you about 1.4. So it's still decent. It's above 1.1. Okay, it's still an okay trade if this is something you're interested in. Now, if you're more conservative, my suggestion is to wait for the pullback. Observe how the market is going to react around 1.2100. If you can get a decent potential buy trade set up from there, I think that move it's going to be more attractive, okay, to the upside, because then the upside potential may be bigger. Okay, so that's on pound. Next up we have is the Aussie dollar over here. Okay, so Aussie dollar, at the start of the week we kind of look at it for a potential downside, right? We kind of get this very nice structure, we get a very nice break. We were looking for a potential pullback in a corrective fashion for this to continue down. It did not really do that, but instead what happens in the market is that we get a V-shaped formation because the market kind of transited into a risk-on environment where the equities, cryptocurrencies market are all rally, right? So Aussie being a risk-on currency, it started to rally as well. So right now, we're maintaining a rather neutral perspective. I want to personally see how the market is going to react off around that 0.7115 area. There isn't much of a decent pullback yet. So from an Elliott Wave perspective, right now, what we're seeing here is this is potentially a 1, 2, 3. Okay, and this is the 4th wave pullback, and of course, this developed the 5th wave here. There's some overlap between 4 and 1, so this might be potentially either an ending diagonal from a bigger time frame perspective. You can see that, where if that's going to be an ending diagonal, then of course we can expect a deeper pullback towards 630 before that big move to the upside. So that completes our 1, 2, 3. Okay, so this kind of take a little bit more time, but if you go back to where we are right now, the primary focus is to observe how the market is going to react around 0.7115. Okay. Again, if you can get a decent rejection from here, I think the downside may be quite attractive back towards 630. So Aussie dollar, you basically just need to give it some time. Okay. Then we have the dollar Canadian. Okay, so dollar Canadian is setting up a pretty decent opportunity right now. Let me maybe zoom out a little bit to let you see the overall count. From this little top here, we have our first move down, second wave up, third move down. But what we are counting over here is this is a bigger degree, okay, and the one here is a smaller degree, right? So we are currently expecting, or I would say anticipating, that we're in a third wave, which is usually the longest among the 5 wave structure. And within this third wave, we also can see here potentially a 1, 2, 3, 4, 5. A 5 internal move to complete the bigger degree third wave. So we are essentially looking to sell it unless proven otherwise, and one setup that I'm looking at here is a potential breakout below that structure low around 3340, with of course a stop above this high at 3420, and a conservative target around 3160, right? So kind of complete this third wave move. So we'll see. Okay, this is where you potentially would have a breakout trade. Okay, yeah. So I think this one quite clear cut. From a larger time frame perspective, we are anticipating this to come down a little bit more to complete this bigger 1, 2, 3. Then only then we'll look for the buy. Okay. So let's see. That's on dollar Canadian, the potential setup over there. And moving next, we have the dollar yen. Now, from a high time frame perspective, dollar yen has been falling down quite a lot, okay, since the peak at the top here around 150.50 back in October last year. Okay, we have fallen obviously quite a bit. Right now we're starting to see a lack of momentum where the drop has started to slow down a little bit more. The market is doing a corrective structure. So right now, I would say any sell would be considered a short-term trade, because eventually, if this is gonna be, as a diagonal, as a crawl, the potential to the upside may be bigger. Okay, and that's where we want to eventually focus on. But for now, in the near term, what we observe is that this little move up is definitely not impulsive, and this move down is definitely more impulsive. So what this suggests is that there might be a good chance that we might get another move down to complete perhaps this 5-wave structure over here, 1, 2, 3, 4, 5, before the eventual move to the upside, right? So this is the part where if you are a little bit more aggressive, you can consider a sell trade with a breakout at 129.7, your stop above 131.1, and a target around 126, which is your 127.2 extension over there. Okay, so this is again another one to keep an eye on. Now, back onto gold. If you have been following us since somewhere around July to September period last year, you know that on the bigger time frame perspective, on the larger scheme of things, we're very bullish on the commodities. It has started running since then, but of course, depending on when you started to focus on gold, and of course your entry criteria as well, you may or may not get any opportunity to jump on board, okay, unless perhaps you're very, very early in the game. There are some decent setups that you could have got in back then. Okay. But for now, because we have been seeing this kind of move up here, we haven't really had much of a decent pullback yet. From a daily time frame perspective, my suggestion is you probably just need to be patient. Okay. On the lower time frame perspective is where we're starting to see a lot of sign where, again, it's not the best time to get involved in a trade. Okay, you can see the market basically right now is going higher, but it's building up a very, very obvious divergence. There's no reason to be buying in right now. I personally wouldn't suggest to go and sell it, okay, because fundamentally and macro perspective, we are bullish on it. So my suggestion is just wait for that pullback and look for a buy setup after that, right? So if you're not in any trade, then the only thing that I would suggest you to do for now in terms of gold is just maintain a neutral perspective. Okay. Crude oil over here, currently it's developing a very decent 3-wave structure. We're still respecting this little channel over here. There are primarily two scenarios that I'm expecting. One is that this continue to develop into a crawl that looks something like this. Then we'll be looking for more downside. After that, around 83.50. Alternatively, the market doesn't need to come back all the way to 83.50. This is already fulfilled in terms of the conditions of a 3-wave move, and it can start to drop from here, right? Obviously, nobody will know exactly what the price will do. All you can do is, of course, have a clear trading plan, how you're going to execute your trades, as well as where are you going to put your protective stops, and prepare the various scenarios that price can potentially develop into, and then you act on those scenarios. Okay, so crude oil, overall, we're still maintaining a bearish perspective. The final target here potentially is looking at all the way back to 70.30, which is the previous low. All right. S&P 500 equities, recently we see a little bit of volatility coming in, again a V-shape that has developed. So from this perspective over here, we are still maintaining a little bit of a neutral one, because if you look at the daily time frame structure, we haven't really broke out of this channel, right? So you just want to be careful, because it can react off this channel and come back down before the bigger move to the upside. So as long as the market price is still underneath this channel, right, within this channel, any buy near the top of it, you just want to be careful. Okay, so my forecast over here is with the near-term momentum here, we might see a little bit of pullback and another push up, but then you want to observe, can the market break out of it this time round? Or is it going to be just another very aggressive kind of rejection and then we're going to expect more downside? Okay, so if you're short-term trader, if you can get a decent pullback here, this might be a decent opportunity. You might then need to consider if that risk to reward ratio to the upside is worthwhile to the top of this channel. If it's not, then my suggestion is just be patient, because this can still develop into something like that, come back down, retest this low before that pushback. Okay, so that's on the S&P view on it, right? So hopefully that gives you some insights. Next up over here, we have the pound yen. Okay, so pound yen we're seeing here as a three-wave structure potentially completed at the top at 16185. We are looking at this sell here with the break of 160.30 yesterday. The look at this in terms of the break is based on this 1 hour structure time frame. We can't get a pushback down, and right now we have a little bit of a retracement. So ideally by today or even tomorrow, we want to see the market continue to fall. Okay, then that would strengthen the sell trade to the downside. If this just continue to build up like that, then obviously this trade will be out, and we'll reassess the situation. Okay, Euro pound is testing that 618, but we're still very neutral on it right now. There's still that possibility of this down move, but this little pullback here looks more of a V. So we're just being neutral right now and see how the market is going to react off that 618 before making any commitment to any particular trade. Aussie yen, as we're speaking right now, is testing the top of this little channel here again with a little bit of a fib at 9250. So again, very neutral, because this is definitely very impulsive. We want to see how the market is going to react around the zone before we commit to any particular trade. Pound odd here as well. I think most of the Aussie are generating a impulsive move, right? So this is definitely a very impulsive move. We're just being neutral and wait for a next setup. Okay, last one here in BTC. We did get the break recently above that 21380, but for now, we want to give it some time and see how the market is going to react from that top. This can easily just pulse back down. That's a bit of a pullback, and with that you might start to see a head and shoulder pattern for more downside here as well. That might happen. Alternatively, what can also develop into is this just comes back very, very correctively. If that's the case, then we can expect more upside. So the only thing here to do is to wait and observe how the market is going to develop from here to help us map out, okay, in the future which one has a higher probability and higher direction that we want to focus on. Good. Okay, so that's all from me for this particular video over here. All the best to trading, and I'll see you guys in the next one.